Good morning. Welcome to another episode of Title Rebels. I'm Debbie.
I'm Christina, Worldwide Title. We've got a wonderful guest today, Mathew Victoria, coming to you from Primary Residential Mortgage.
Correct. PRMI.
Okay. I like the I, even though I learned that it just stands for ink.
Yes.
But then again, I know that a lot of people address it as preemie. No?
No.
Maybe the outside crew.
I just call it primary.
I like that. Well, welcome. Primary is first, so then that puts you in, obviously, the first thought there of anybody that might think of you.
First works.
In this business, that's what you want to be. You want to be first. You don't want to be last. We're excited to have you. Had the pleasure of working with you for some time. So it was really nice that we were brought back together on a recent transaction from a very good person, and I actually know that he knew you for a long time as well. Mm-hmm. Debbie's been the brain behind a lot of your transactions over the years. I think we did a ton during the refi boom, but that seems like eons.
It's funny. My wife was my processor at the time. So we were talking about it. And I said, it's funny. Like, we did a lot of transactions together and you guys made it happen. And that's important in this business because there are some companies that are a little prima donna-ish. So they don't want to get things done the same day or things like that. So you guys always made it happen. So when I found out that we reconnected, it was awesome.
Where there's a will, there's a way.
Well, yes. And luckily, Debbie and I are crazy. And we've got a crew that believes in that crazy. One of the things I always like about you is you engage in so many different things with people, building relationships, looking for you to continue to grow and always put your book of business out there.
You kind of have to, because in this business, it changes for us so much, so quickly. So if you're not kind of sharpening your tools all the time, so that's why I put things together the way that I do, because I had a scientific method and I was a construction mechanic. So I did road service, right? So I would be out on my own and I had to fix stuff myself without really anybody else. So I kind of had to be like MacGyver and start kind of thinking like, well, hey, all right, this is broken, but why did it break? And how do I make sure that it doesn't do it again? So I approach loans the same way.
Well, I think that's, you know what, I have to chuckle.
Because we do a lot of business with houses that are held together with duct tape.
Yes.
So, yes.
But I was going to comment on the MacGyver because I feel that Debbie's got a little MacGyver in her as well. I think the time that I needed you to come and help me reset my electric fireplace and what you did with a pencil, a pipe cleaner, and a paper clip.
Paper clip, I was
I
going to say,
undid some paper clips.
Undid the paper clips. You know, they are an underrated resource in so many different things.
I use paper clips on a lot of my loans. You kind of have to. So, but the bubble gum helps too, although it's not a conductor, so you never know what you need to actually put together.
I love that. Well, we kind of feel the same way.
Bubblegum is multi-use.
It is.
You know, but see, these are some of the behind the scenes things that the clients don't know about. The clients don't need to know about it. That's why they hire us to do it. I'm sure you can also comment that now with email and everybody using that as a primary source of communication, we'll open up an email and you've got buyers on that email now, you have sellers on that email now, you have multiple chains of people. And I always like to say, I'm taking the clients off because they don't need to see the back and forth of what we do to get them to the closing table.
Beware of reply all.
Exactly.
Beware of reply all, and beware if you're blind CC'd, because if you don't have that initial I'm blind CCing you on an email right now, that is like the thing that I cringe. I don't blind CC many, but that's the thing that I cringe about sometimes, where I'm like, oh my God, they're going to respond. You know, so
I literally just had that on a transaction. The buyer agent wound up putting everybody on the transaction. And actually, you know what? It was the one that we were on because of the transition of what happened. Next thing you know, the selling side starts freaking out. I get a phone call from the listing agent like, what do you mean this is what's happening? I'm like, hold on a minute here.
But that's what you have to do, and you have to dial it back. You know, so many people think that the smallest little thing that they see us communicating with is this massive problem, and to them it might be, right? I don't know what they do. I'm not a subject expert in what they do, but let us do what we do, and don't worry, that fire alarm will go off if we've got a massive issue. So you commented that you bubblegum tape a lot of things, you paper clip things. Tell us a little bit about.
We can relate with that.
We can relate, but tell us a little bit about one thing that Debbie and I have spoken about is the cost of everything, right? The cost of every single thing in real estate has increased. Except for title charges.
Title charges cannot
I'm
increase.
actually just in that
We are
moment.
so
I'm like, wait a
regulated.
minute.
The state
title
gave you your
charges
handcuffs.
has stayed the same. Yes, well, that's also another misconception, right? That like our bill is going to greatly.
I love when the lenders come to us and say, we really need this to go. What fees can you cut? We're like, none.
Well, but
I mean,
you know
it's
what?
very rare that
We
can
will
cut
do
anything.
that, and I will do that.
We
Not
do.
in every instance, because again, our hands are cuffed. But we had a client recently who was over on cash to close by like $300, minimal. Lender wasn't doing anything. File has been, I want to say 8 months, so we know what that lender was going through.
Nobody could find $300.
Nope.
Oh my
We
God.
ended up
You'd be surprised.
We ended up closing the file ourselves, so we didn't have to compensate the notary, which we will do. And then again, the client was elated because he would have thought maybe his realtor would have helped. He would have thought that somebody might have assisted. So in the 11th hour, Debbie says, no, I'm going to drive and we're just going to do it and get it done. And I feel in anything that we've done that you have that same kind of vibe with you.
Yes, I actually had one where this was a long time ago, prior to TRID, and we wound up having to get the attorney to take their bill off of the HUD at the time, right? Because this was pre-closing disclosure, right? So we had the attorney doing that. We had the title company removing some of their fees that were paid out of closing because we had some cash that we couldn't vet. Like people think like, oh, I'm just going to bring a bag of cash to the closing and here you go, right?
We actually have had that. We
Like,
have
I'm
actually
sorry,
had-
Mr. Buyer, but it doesn't work that way,
We
unfortunately.
Actually had a woman bring almost, what was it, $100,000? How much was it?
I don't remember how much.
It was.
And we told her, I mean, she was very,
came to
very
the office
sweet.
and she says, I have my
It was the
deposit.
craziest thing I've ever experienced. And we ran into a very recent one too, where a client said, you know, I have a construction company and I have a lot of cash. So is there any way that I can meet you at your bank? And we are going to count this 30 grand. And for us, we can accept.
Was it a mortgage transaction?
It was hard money, so they weren't
Yeah.
it didn't, in that case, at the end of the day, I think his lender, because even hard money, they have to source in essence where it's coming from. But he said, no, you know what? No, I'm just going to give you a certified check. I'll just use that and pay some of my guys with it. And I'm thinking, who's got just 30 grand in cash lying around? I would be
Must be
concerned
nice.
about a fire. I would be concerned about rodents that I do believe like to munch on cash. At least that's what I learned in Bad Boys 2, the movie where the mouse were downstairs in the basement in the cocaine house, and they were eating all of the money. But I didn't believe that probably was happening with this guy. Anyway.
So when I talk to people, right? So when I have my first conversation with somebody, it's kind of like more finding out what it is that they do, how they do it, what do I need to ask for?
Sure.
Because I don't want to come back 15 different times asking for stuff that I should have did in the beginning, which a lot of lenders do.
Smart.
Right? And they're like,
Very
oh, well, how come
smart.
you didn't ask me for this before? Well, I'm sorry, I forgot. So one of the things that I say is, so I need to know what you have, right? And I joke around. I say, I don't care if it's in the bank, if it's in the under the mattress, or in your a shoebox in the closet. It's a nice little joke to kind of break the ice, but
Absolutely.
I'm kind of being serious too. Like, hey, tell me what you have, where you have it, because if I need to figure something out where I need to bring more money to the closing or more money for closing costs because something else happened somewhere, I need to know, because I'd rather be conservative in the beginning. I'd rather tell you more than what you need rather than less, because then you have a problem trying to fix things. Like you said, it's a matter of being proactive or reactive.
It's easier to take away than to add.
Well, that's
Reactive is hard. You're fixing stuff.
Reactive is very hard, but it's interesting that you bring that up. I love the approach because we feel the same way. I think people are hesitant, especially for you, to be as forthcoming, right? There might be people who maybe they don't have a ton of resources and now they're coming to you and they're saying, oh my goodness, I might have an opportunity to buy a house, but I don't have this, I don't have that. is that where you come in and you are gonna build them, in essence, a loan that's gonna work for them? Where do you then come in to say, hey, I know that there might be some grants for the state, there might be some things, because
We are seeing a lot of
a
deals
ton of
with
loans
grants.
closing right now with the New Jersey Housing Grant. They're getting some first-time home buyer grants. Talk to us a little bit about that, because I find it very interesting. We had one the other day, a woman, the bank said she can't get back more than $3,000. And I wanted to say, I want to buy a house and somebody give me a check, because I think that's amazing.
Yeah, these grants are
So-
like 25,000, like
20,000 usually, right?
There's a bunch of different layers here. So my last closing that I did with the NJHMFA grant, she brought $60 to closing. That's what she brought. She got her $5,000 deposit back because we couldn't source the funds that she had originally used for it. So she got the $5,000 back, and she brought a check for $60, $60.66 for closing. So NJHMFA, they run a grant program, and there's two different tiers to it, right? So if you're in a low-cost county, which is going to be like Mercer, Warren, some of the southern counties,
Sure.
it's $10,000. If you're in a high-cost county, which is Ocean, Middlesex, Monmouth, Somerset, Union, Hudson, keep going, right?
Of course.
It's $15,000. Now, if you are a first-generation homebuyer, which means that your parents have not owned a house in the last 3 years, so if they're dead, that counts too, right?
Okay.
You get another $7,000, so you
That
have
makes it to 20.
$22,000. That's what my buyer got, because she was 60 years old. She was buying in one of the adult communities. By the way, most people go FHA on the first-time home buyer grants. So the last one that you saw, was it FHA or was it conventional?
No, it was FHA.
Right. So most lenders are a little lazy and don't want to do the work to actually do the conventional version of the program. Because
They'll
a
just
lot of these adult,
automatically assume, right?
So the adult communities, a lot of them are not FHA approved. So, which means that there's a deed restriction in there that they can't rent for the first 2 years of ownership.
Yes.
That knocks them out for FHA because you can't get a spot approval for it either. I tried.
I think deed restriction is a trigger word for Debbie. We get a lot of those.
Yeah.
A lot of deed restrictions.
A
Well,
lot of
you,
deed
you see that on low income to
Yes,
moderate housing. There's a
yes.
deed restriction there. You know,
Affordable,
I have
yeah.
somebody that's in one of those right now. She's going to be buying a house, so that doesn't apply to her anymore. But the deed restriction knocks them out for the FHA. So there's a conventional version of the NJHMFA grant program. Most people don't know about it. My buyer used it because she was a good buyer, and I took the time to figure out that, hey, how does this conventional program work? I actually had an hour-and-a-half conversation with Dave from the NJHMFA program. He's the mortgage guy that oversees the whole program. So he explained a lot of the caveats to it to me.
Well, it's incredible to have a loan officer. I actually feel that you are, in essence, more of a financial manager for them in some respect, right? It boils back to what you were saying. You cannot offer the depth of these products without somebody being so forthcoming. Potentially, you know how they always say, kind of check that dignity at the door? I feel that due to economic issues or some financial hardships, they might not want to be as forthcoming. And then you are working in a retroactive way rather than being proactive. We feel that we have that a lot of the times too. If we have clients that are, I might have a judgment, I might have something that I have to let them know about, because that's also something that you may very well have to build in now and say, we got to take care of this and we should take care of it in a proactive way.
Well, thank you to the government for taking judgments off of credit reports. So now we don't see them anymore because we used to.
You
So now-
see them when title comes in and
Correct.
then you're like, we were supposed to close this file in
Well,
a week, 2 weeks.
So in reference to the transaction that we just closed recently, so it showed up on title that there was a prior judgment for unpaid child support. And it showed who the two people were, which was the original first wife, so they were divorced. So at that point I saw that and I said, all right, we're gonna have a bigger problem here. Give me your divorce decree. Well, why do I have to do that? Well, because as soon as the underwriter sees that there was a judgment for child support from an ex-spouse, they are going to say, can I have the divorce decree, please? Why? Because they want to make sure that there are no financial obligations left over from the divorce. So when we submitted in with all of the documents, they never asked for anything else past that because I gave them what they wanted, what I knew they were going to ask for.
Well, again, that just goes to show that you're not looking to waste someone's time. And it boils back to what Debbie and I hear very often. The lender constantly asking me for the same thing over and over, or we hear from multiple processors, or we hear from all of these
That is
different
the
people.
biggest complaint that
And
we're
that
always
seems to be
hearing.
one of the largest complaints. Now, obviously, there's complaints in everything, right? You hear more about complaints than you do about your accolades. So, to
It's
me,
always easier to blame other people for your
always,
problems.
but it's almost to the point where until title is run and you're actually seeing that judgment report from the state, a lot of people tend to be very blind to thinking that. Fortunately, child support is very strong here in the state of New Jersey. It's valued very heavily in terms of some others, but it's nice to know that by showing a screenshot or something of your, child
Even a
support
note-
website.
Even a note from the ex.
Correct.
They're
But
called-
they've been a little hesitant on that sometimes. Debbie's like, I'm waiting for a note from the ex-wife. And
Just
I'm like,
saying that they're
you
caught
really
up."
think that that's going to come in?
I actually
Well,
had
they
one 2
do.
years ago.
They
We
do
were
do
doing a
come in.
refinance. There was a $75 open child support judgment up in Union or Essex County that was paid, but they never actually dismissed it from the child support website.
It's
And it was from
interesting.
like 8 years prior.
It's
and
interesting you just said that, because we had a deal, it's actually closing this week. Just 4 months ago, the child support judgment was on the judgments. Okay, but the kids are now 33, 34 years old, so we know they are not,
Right.
it's not in effect anymore. But because, it's been so long, we continue the judgments to make sure nothing's been added since that time. Now it's wiped away. It's like, wait a minute. So all of a sudden,
Well, I'm glad they caught
They
up.
caught up finally, to come, these kids are now 34 years old. They caught up.
Well, they
and
did
wiped it
finally
out.
catch up, because I'm sure in the cases of you with judgments, we'll stick with child support. It's obviously a very, very important topic. We find that even if you are in arrears once, once, they will file that with the probation office. So in this respect, one time and one time only. And then sometimes you feel for the father, right? Who is like, wait a minute, that's from so many years ago, that's been cleared up. Now, most title companies will say, okay, that's fine. Well, we'll get the proof that it's been paid and everything's done, but we're actually gonna go the extra yard and get that warrant of satisfaction. We're gonna help that gentleman, or woman for that matter,
gonna say, yeah.
not have to continue to, I guess, I hate to say it, but deal with it. It also brings us back to the funny stories. Did you ever have one where you were in a position, the gentleman might have had a child support judgment, the wife, but then they didn't know that they had any other kids or something like that?
That one I have not, but I'll give you a very interesting one that I felt really bad for. Her and her boyfriend come in to do a pre-approval to buy a house, and when I run her credit, there was a mortgage on the credit, and the mortgage was in foreclosure. She co-signed for her parents, and she didn't even know that the house was in foreclosure.
Oh, wow.
Like, I felt so bad delivering that to her. I had another one where I ran, they were fiancés, and I ran both of their credit. She was great, he was not. And I was like, I'm guessing that you guys haven't had the conversation about credit and finances,
Finances.
because like that, I'm dealing with a lot of divorces now too. Right?
Yes,
So
yes.
divorces, bankruptcies, things like that,
Yes.
right? Which get a little messy on the title side as well as the lending side, right?
Makes it more
Absolutely.
interesting, yeah.
It absolutely does.
It does.
And it's like people don't realize some of these things. And one of the biggest problems for divorce, or causes from divorce, is they don't actually have financial conversations with each other, because they think, well, this is my money and my bills, and that's her money and her bills. Well, when you're married, it all comes
It
back to you
all
at some
comes
point.
back together.
And-
Agreed.
And that's what people don't realize. Like, finances is something that you need to have a conversation about. Because if you're buying a house together, like another one, I just tried to pre-approve, couldn't do it because they like spending too much money. So they like living a certain way. I'm like, well, if you're going to buy a house, you kind of need to
You
live a
gotta
certain
dial
way.
that back.
I call it
Yeah.
mortgage mode, right?
Oh, I like that.
So what I do is I give them a little homework, right? So the first thing I tell them to do is write down for the next 30 days, write down every single thing you spend money on. right? I don't care if it's $2 cup of coffee, write it down because you have leakage. The leakage,
Oh my God, I love
the
that.
leakage
So
is
you're
what is
also a
going to wind
plumber,
up helping
right?
you. What's that?
So you're also a plumber.
Yes. Oh, I have many roles.
You're tightening.
I'm
you're
a therapist.
tightening,
I'm a
you're
psychologist.
You are. No. I support that.
So
yes.
what I call it, right?
I
Can you come
love
talk to-
that,
Can you come
Matt.
talk to my kids? 'Cause
I
there's a lot of
equate getting a
leakage.
mortgage to getting a
love that.
financial colonoscopy. Right?
Oh
That's
my
what this
God,
is,
Matt, that's
right?
amazing.
We're going to look at you inside and out because we have to make sure, like, somebody said to me, why do you do all this? Well, listen, I'll tell you what. Give me $1,000, and what do you want from me? Nothing, right? Oh, no, I want your driver's license, W-2, paycheck. Okay. So how about $300,000? What do you think that we're going to want for $300,000?
Right.
Right? We want to make sure that you're a good person because a credit score directly is a numerical representation of how well you pay your bills. So if your credit is 500, you're not that good at paying your bills. So we want a little bit more. We might have to fix the credit, things like that. So it's a financial colonoscopy. So we're taught from birth, right? As kids, you don't talk to strangers and you don't talk to people about their money, right? You don't ask them about their money. It's rude, right?
Very.
My job is to talk to strangers about their money. So that's what I have to do. So I have to deliver things a certain way.
Well, then on that note, please tell me how some lenders feel about the call that we get of my client has no money. We're supposed to close in 3 days. Reverting back, I would like these fees. We need to fix these fees. How at that point, if the conversation is being announced that this is truly the last bit of dollars that my customer has, in what position does the lender feel comfortable actually lending all of this money, knowing
That they
that
have no
this
money.
is completely wiping every bit of resource they have?
Well, there's a couple of different things that could happen to
Okay.
that point, right?
Foreclosure.
So, no. So most of the time, or some of the time, lenders won't properly qualify people,
Okay.
right? So what they'll do is they'll put them at the top of their budget and say, "Well, can you save up this much money by the time we close," right? Or the person just wind up not listening to anything, or the lender didn't tell them, "Hey, don't spend all your cash." It happens.
It does.
You know,
They'll go out and buy a new
so
car.
those are usually it. Like usually it's the lender that didn't do it right to begin with, or maybe they didn't vet their money correctly, because it's like you have to back assets out. You ever have one where like a week before they can't close because they can't vet the money that was done to begin with using
Yes.
the earnest money deposit or paying debt off that they can't, because if you have to source all this stuff.
Absolutely.
And that's what people don't realize. Like, we have to go back 60 days, 30 to 60 days, depending on the program, and we have to look at your money. We have to educate you. What's a large deposit? How do you do it? How do you move money around? So there's different nuances between the different loans of how you get gifts. That's another one, too. People don't properly vet gifting money, right? Hey,
Correct.
you're going to get money from your uncle. Is your uncle okay with giving me a bank statement and showing me? No, I actually had that happen. I had to call the relative, and I had to have a very serious conversation saying, listen, send me the bank statement. I won't show it to them. Like, it was that difficult of a situation and conversation. We got it, but I was just really convincing to them to get it done.
Well, I think that runs very similarly into what Debbie and I and the crew see all the time, right? I mean, specifically for us, at the very end, you know, we're getting, obviously, license information. We're getting social security again, different for you. You're the lender, right? You need a lot of that. Of course, we do as well for the finishing piece, but there was just very recently one transaction where we had to come in at the 11th hour and have our attorney prep docs for them. And I was like, okay, through a text message and a group message with the attorney, I need your social security number. I need the date of marriage. I need what your maiden name was. And even in the thread with the attorney, the husband and the wife, she jokingly wrote, "Are you stealing our identity?" And in a moment, it actually made sense, right? We could do, thank God, right? But we could do so many different things that people are so hesitant about. And that's why I think Brenda gets a lot of kickback when it comes to clearance. You're getting a phone call out of nowhere. The lenders asked us, hey, would you mind reaching out to the customer? Yeah, no problem. Of course, that's actually part of our job. But We have to vet where we're coming from. A lot of the times they want an email with every person in the transaction to understand the validity and ensure that. I actually think that that's a wonderful thing of being able.
I mean, where would we be any different if we were on the receiving end of that? Like, if we were the client, there's phone calls, I'm like, how do I know you're legit? I mean,
I've had that happen before, and
Yeah.
then I just tell them, like, hey, listen, that's the title. That's what they're doing. They're okay. 'Cause they told me who it was. Or the another one, too, is like if you're doing a refinance, you have the lender should tell the client, hey, this is my title company. This is the person that I've been dealing with. So this way, if you get a phone call from them to
Right.
schedule a closing or something like that, like, because I've gotten the text right after the phone call. Hey, is this the right person? Yes, that's the right
Well,
person.
especially when we're, sending them an authorization and we're asking them to put their social security numbers. Now, granted,
I mean, we're asking for everything but their
Fraud is
firstborn
rampant.
child. Exactly.
it so is
You
rampant.
know, like that's a whole other subject. But it's you have to know who you're working with. Communication is very important. Proactivity is also very important. So like when I have a problem, I figure out a solution. I call the realtor, I call the buyer. Hey, this is what our problem is. This is what the solution is. Because you can either be problem focused or solution focused.
Well, I think that first off, you can absolutely tell the difference between the way that you run your book of business, which then makes you successful. It makes you, even in a challenging market, to be able to say this deal, that deal, this deal, that deal. We have very many that are hurting, but that's because you've jumped on it. You haven't put the time into it. You haven't put the time to really hone in on your craft, and the days of just the loans falling from the sky are over. Right? So being proactive, ensuring that the customer, and you're ultimately giving them the time in which they want, right? You're just like an agent, just like us. The phone doesn't stop whether it's 5, 6, 7, 8 o'clock at night.
It's 24/7.
It's 24/7. I mean, when I was buying a house a few years ago, when did I talk to all my people? At nighttime, right? And it makes it really, really interesting for people who truly in this business give so much of their time, because you're working directly with the public in one of their largest investments ever, whether it is an investment or a new home or a second home.
I think one of the problems is that things have become so internetized that they think that, I'll just go online and get a mortgage, and I'll just go online and get an attorney, or I'll use one of those attorney services. And
Sure.
what people don't realize is that there's a lot more. Like, what happens if you have an internet lender? What happens if you need something at Saturday or at 7 o'clock on a Friday or a
Or
Monday?
the internet goes down.
That doesn't happen, right?
Oh, no, that's absolutely not
So
happening.
people have become so cost focused. Like, the main question people say is, what's your rate? That is the last question, honestly, they should ask. More is, what's your service? How long have you been doing this? How thorough are you? Who do you have behind you? What does your communication look like?
Absolutely.
Those are the things that really ultimately matter, because if I have a problem, how many times have people been ghosted in this business by lenders that have problems and they don't want to address them, and they think that not communicating with everybody is going to help? That makes it worse, because
That's a
the
rhetorical
thing.
question, right? You don't really want us to answer that
No,
question.
but the communication in this business is so important. When
Yes.
people say, oh, you're just sending them to me because you're getting money, right? Well, no, that's not the case. Like, I know that I have people that I can text or call, like the transaction that we just closed, right? He was in a rush. He winds up getting pre-approved by the agent's lender, right? They pre-approve him for a 10% down conventional loan, right? Then I wound up getting it. We couldn't do it. I'm like, this doesn't work, right? So they didn't really pre-approve him. They pre-qualified him, which is some questions, because they didn't collect all the documents that I did. So then what happens? We find out that, hey, this doesn't work. We have to go FHA. Now, they're a little worried about FHA because I think they had another buyer at some point that
Okay.
that didn't
That
work.
was not going FHA, right?
Because of but it was the condition of the house that was an issue.
Yes.
Right? So I said, all right, well, I'll tell you what. This is what we're going to do. I said, is there work that needs to get done in the house? Yeah, we have to do this, this, and this. Well, let's do it 2 or 3K. So here's what that does. That now takes the condition of the house out of the equation, because the house is closed in as-is condition. So we don't care anymore. So now it takes the FHA problem out of the mixture, because that's usually what they're concerned about. And we can close the property in as-is condition. It was like $50,000 worth of work that was getting done. So it took it out of their pocket, because they were going to have to spend it anyway for
course,
stuff.
yeah.
So, and it got everybody comfortable, but I called the agent, I explained it, I sold it, And then I said, hey, this is what we'll be able to do. And we got it done.
Well, then again, you come in as the hero, and hopefully with your, your just always ability to see the tree, right? And you've got the tree, and we always wonder what branches come off the tree. How have we been able to wow somebody where somebody in that transaction actually calls you up and says, I really liked what you guys did. I'm gonna give you my next deal. I want to be able to use you because I don't have to worry. And that speaks volumes. I mean, that was quite a transaction. That was a long transaction.
Didn't have to be.
It didn't have to be if they came to where they knew was going to get done. And you mentioned ghosting, right? We're in the position from title, not everybody, but there's quite a few people that we could be getting title requests from 2 lenders. And all of a sudden we'll, go to the attorney and we'll just say, hey, this is if we do not communicate with the client. Hey, just, so-and-so reached out to us, just want to, my client's shopping. Okay, no problem to shop. But then now we're revising the commitment one day.
Hold up on that thought. We've had a case that went all the way up to almost the closing date where they were still keeping both lenders, not knowing which one she was going to be going with.
And then we
until the
have to
last
be the
day.
one to tell them. I have had to tell somebody 3 weeks ago, hey, I just want to let you know, just please, I
Don't
have
shoot the
gotten
messenger,
instructions,
right.
don't shoot the
I feel bad
messenger.
for the lender doing all that work.
You have no idea, and so do I.
This client literally was playing both sides, both lenders, like, well, what can, pretty much like, well, they can do, what can you do for me? This one can do that. It was up until like the day before the closing, and it was like, you need to pick which one you're going with.
It's crazy. Sometimes I wonder, well, should we open up an A file on this property so that we know, are we communicating with this one? Are we communicating with this one? We haven't found it very much recently,
No.
which is good. But when rates skyrocketed, we were seeing it more and more and I always like to say, we're pro bono until we get to closing. People, I think,
Same thing with
don't.
us.
Oh, well, absolutely. We all are. So until we get to the closing table, the amount of work that is actually going on behind the scenes is insane. We've just had to ask you for everything to give you that $500,000 loan. Just have the courtesy. I mean, even these days, it's so, ballsy, but just shoot a text message, send an email, and then maybe if you don't want to have that confrontation phone call, just don't answer it.
Well, the problem with texts and emails is that you can't express emotion through it. So sometimes the context can get a little confused. So I like phone calls. And
phone call.
I tell people this, right? You can have speed, you can have cost, and you can have quality. Pick 2, because you ain't getting all 3, right?
that.
So pick 2. If you want it fast and you want it cheap, you're going to suffer on your quality. If you want it fast and you want it quality, then you're going to pay for it.
Absolutely.
So speed, quality, and cost.
I love that.
Pick 2 of them. And what a lot of people don't realize is that when it comes down to a lender, they think that, oh, they're 1/8 of a percent. Yeah, but what are you getting? Right? Are they educating you? Most of the time when I get people and they were approved by somebody else, they don't know what kind of program they were doing. They don't know what kind of rate they were getting. They don't know what their down payment looked like. And a bigger one, they don't know what their monthly payment even looked like.
Yeah.
Because the rate is not as consequential as the monthly payment, because a lot of times, bringing back to what you were talking about before, was affordability, right? Housing prices right now have gone up. Why? Because there's a lack of inventory. 65% of Americans have mortgages that are below 4%. Why are they going to move? Right? So if they're moving, it's usually because of death, downsizing, bankruptcy, divorce, or relocation.
Yeah, but even if they're downsizing, they're
Or
not,
upsizing
yeah,
because of
it's-
family, right?
Correct.
Those are your
Where they
main
gonna go?
reasons of why somebody would absolutely need to move.
There's no place to even go anymore.
Right. So cost is becoming a big thing for people. But what I try to focus on is they say, oh, well, my rent is $2,000. I want to stay around there. Right? I say, okay. So I have to be pragmatic when I speak to people, right? And I can't just sit there and point my finger and say, you're stupid. You don't know what you're talking about, right? Because that obviously doesn't help, right? We have to come from a place of helping people, right?
Absolutely.
So you gotta put your MacGyver
So
book.
I expressed to people, I said, do you understand what the interest rate is on rent? I'll ask you, do you ladies know what the interest rate is on rent?
100%.
Exactly. Why? Because zero of it goes to any benefit for you.
Because they're not owning it.
Well, it goes to the landlord.
Right.
And they're the ones that are paying the mortgage, right, and renting the place.
I've
So
never
your interest
understood
rate is
that.
100%.
Right.
Now, would you rather pay 100% that's not any benefit, right? So it's not tax deductible, it's nothing. Or would you rather pay a 7.25% interest rate that you're going to gain equity on your property and you can actually deduct on your taxes? So a 7% interest rate at a 24% tax bracket actually puts you at 5.25%. And that's what people don't understand. Because you get back about a third of what you're spending on property taxes up to $10,000 now, and interest up to a $750,000 loan. So when I ask you how much did you get back last year, if you tell me $3,600, now that's $300 extra a month that you can actually use towards your mortgage because you gave the government an interest-free loan. Now I don't know about you, but I never got an interest-free loan from the government.
No.
So most lenders don't understand those kinds of things when they're sitting down explaining it to a first-time homebuyer who's scared shitless.
It's the
Shitless,
biggest, it's the
indeed.
biggest
They're
purchase
scared.
of their life, exactly.
Indeed, very.
So it's a matter of explaining some of these things to them. Like I bought my house in June of 21. I closed in Silverton and Toms River. I bought my house at 575. My house is now at 750. Look at that over 3 years.
Well,
That's a lot.
Oh, absolutely. I mean,
Almost 10%.
there's no question about that. And
Almost 10% every year.
Well, that's insane.
Yeah.
I mean, it's interesting how you reference the under 4%, but yes, at the same time, the amount of equity that people are sitting on. We're seeing even refis that are coming in, gaining a higher percentage, but paying off $50,000 worth of debt that a credit card is going to be 25 to 30% interest rate.
Well, that's another great one. It's like, well, wait a minute. Why am I going to refinance my house if my interest rate's going to go up? Well, because you're not looking at the right thing. And that's what we're taught by that's what we're taught. Always ask, what's the rate? What's the cost, right? But if I save you $1,000 a month on debt payment, because that's what people aren't really looking at, right? Like, what's the interest rate on credit cards? 20 to 30%.
Oh, at least.
Yeah, at
Daily
least now.
compounding interest, right? And do you know which line you can actually write that off on your taxes? You can't.
I was just going to
It's
say.
not tax deductible, right? Mortgage interest on a primary mortgage is tax deductible. A HELOC is not unless you're using it for renovation purposes. They took that away in 2018. So a HELOC right now is somewhere around 9%.
Wow.
So you got a mortgage at 4% and you're going to take out a HELOC at 9%. That's 13% between the two of them.
Sure.
You're
But
still
then
worried about
you're
that
still-
7.25% interest rate on your
Yeah.
cash out refinance so you can restructure all your debt and skip a payment?
It's sticker shock. It's sticker shock and it's a lack of education. And that just boils back to ensuring that those internet-based mortgage companies, your barber's friend's wife,
They will never explain
has
that to
their
somebody. They
broker
don't know how to.
license. No, they don't. And that's why it is important. As much as the business has hurt so many, it is weeded out a substantial amount. And that's where it is important by having a great experience with somebody that they actually go forth and, they say, hey, Matt and his team were amazing, or so-and-so were fantastic. Give them a shot, give them a call. And by doing all of that, I want to get a mortgage from you right now. I mean, you just educated the bejesus out of me in terms of things that I really didn't even know, and
COVID changed the landscape for a lot of
COVID
different things,
changed
right?
everything.
So
For sure.
a lot of people got into the mortgage business in COVID, right? So if you Google NMLS Consumer Access, you can put the person's name in there and their NMLS ID, right? Which is anywhere from a 5 to 8 digit number, right? You can actually put their NMLS ID in there. You can see their work history. So for a lot of these internet lenders, like, the one that flies up to the moon,
Yeah.
right? You can actually go on there and see most of them were waiters and servers prior to getting into the mortgage business 2 years
Huh.
ago.
They all jumped in they saw the
Right.
deals falling from the sky.
I got my license in 2012. So you can see that anybody that has gotten in recently, do they really know how to do a lot of this stuff? No. They don't. They don't
Nope.
understand no income loans. They don't understand bank statement loans. They don't understand DSCR and investor loans. Or like I do hard money too, because a lot of this for me goes together. I deal with a lot of people that are self-employed, and they are tricky as hell to do loans for.
Yes.
So I got a guy right now, his wife had a Chapter 13 bankruptcy 2 years ago. So there's 3 of them on the property. There's the wife, there's the husband, and then there's the mother-in-law. He's like, well, can I do a refinance? And I said, well, not under her because she had her bankruptcy, right? So what we're actually doing is I'm doing a no-income loan under him. He owes tax money too, so we're going to pay off his taxes. We're going to give him money, no income loan, so I don't ask for W-2s, taxes, any of that. All we're doing is a cash out refinance on that house. We're going to pay off the bankruptcy, and then in 2 years, we're going to come back in and refinance him into an FHA loan with him and his wife, and then 2 more years later, a conventional loan, because she'll be past her 4 years from the bankruptcy.
So see, just from this initial way of you helping them, you have given them the landscape of what they're going to do. So then in that case, it boils back to your mortgage motto, right, of your lender for life.
Yes,
Because you're giving them the framework. You're helping them say, this is where we're going to be. I mean, I'm sure just like a lot of, experienced loan officers right now, you guys have tons of people waiting on deck. The moment that your phone call comes to say we're down an official point of where you are, get me your paperwork, we're refining you.
Or more importantly, hey, asking the extra question, which a lot of people don't, right? So people worry about this right here, which is their transaction at hand. They don't actually step back for a minute and look at other things too. Hey, what else do you need? Is there credit card debt that you guys have? Is there a car loan that you guys have? Do you need to do renovations on your house? Because a lot of people don't necessarily want to move, so they can use a 203K, do an addition on the house, gain all that extra equity because they already have. Like anybody that bought prior to COVID, they have equity in their house, or even the first 2 years of COVID. Right? Even if you bought 21 into 22, you still have equity in your house. So you can do a 203K refinance, redo your house, and not have to move. So for some people, that could be a great opportunity, but a lot of people don't know about it or talk about it.
No.
So for me, I'm what you would call a creative financial specialist. I look at a lot of different angles putting things together because you never know who's going to do what or who needs to do what or how you can make something happen for somebody or put a plan together. I had somebody that had a bankruptcy. We wound up doing a purchase for him, 30% down payment. Then we came back and did a refinance once he was past 2 years past his bankruptcy. And his bankruptcy, that was a 1 year out.
It's a lot of people that we're seeing right now that have gone through that as well, which just continues to show the extreme challenges that people have been experiencing. We've had 2 bankruptcy sales in the last, I would say 2 weeks, and we're waiting for the court order to sell. I actually had one yesterday where the sellers themselves walked with about 30 grand after paying their bankruptcy attorney or the bankruptcy trustee like $85,000. So I think that people don't know because they're scared. They're scared. They're not educated. And that's why, you are what you are. And we were very, very lucky to have you on today to educate us and really everybody else. Because like I said, I want to now get a mortgage from you. You just sold that beautifully.
I'm trying to think what kind of addition I can build for my kids.
Those little tiny houses in the backyard. Can we refi to build like 3 little tiny? No, I'm just kidding.
You can do one.
I want to.
You can do an ADU.
We closed a file on a trailer 2 days ago, and that was the weirdest experience ever. You got to ask them: is it on wheels? Is there a license with the DMV? Is it on cement blocks? And you've got somebody like an agent, and she's kind of chuckling because this was her first one.
Was it a cash deal?
No. Believe it or not, they got a mortgage from. I actually don't know. We just came in to settle. They didn't need title. They didn't need
can actually do
else.
mortgages on manufactured housing, but there's a little bit more. There's some caveats.
Manufactured housing can't just drive away. That's the thing.
Right.
If you
Well, that's how the docs were saying. The docs were addressing it as a manufactured
What does the
house.
lease on the land look like?
Correct.
How new is it?
Absolutely.
Because it has to be past a certain year. Because anything that's like 40 years old, you're not doing that.
No, not at all. Well, this was great.
I learned a lot.
I learned a shit ton. I had fun. Did you have fun?
Absolutely.
Good.
It was great to reconnect after all these years.
All these years, indeed. I always like that. When I see a name, I'm like, oh my God, we did so much work together. This is amazing. And I think that's how the first email came to you on the recent deal that we just did. So we can't thank you enough for coming on.
Yes, thank you.
Title Rebels today. I think we killed it. Debbie. Hold on.
No, you're Christina.
Oh shit, I'm Christina. I'm in my peripheral vision. I'm looking at Debbie. So I'm Christina.
I'm Debbie.
And
I'm Mathew Victoria, the Creative Financial Specialist.
You sure are.
I love that. Thanks for listening. We'll see you next time.
See you next time.
Awesome.